Hi everybody, it's Neil. On Tuesday, the Federal Reserve Chairwoman Yellen signaled that interest rates are not going up immediately. The picture is pretty cloudy. Last week's employment report was really troubling. Only 38,000 new jobs were created in May, and economists were expecting more than 158,000 new hires. Does that signal that the economy is slowing down, or the Fed's going to put off their announced interest rate hikes indefinitely? I just wanted to touch base for 3 minutes and give you my update on the economy as I see it. There's so many people sharing their opinions over the net and airways. I thought it might be helpful to you to share some facts. So let's dive in. Number one, despite signs of weakness in the job market, retail sales in April surged 1.3%, which is really strong. That growth was led by autos and non-store retailers like Amazon. So we've all seen how brick and mortar stores are struggling, but the facts suggest that not everyone is in dire straits. In fact, core sales have risen 13 of the last 14 months. Car makers sold 17.6 million cars and light trucks in 2015, which is close to a record high. Number three, the amount of money consumers spend servicing their debt for mortgages, loans, rent, student debt, etc., is at a low point we haven't seen since the early 80s. And number four, payrolls are up over 2.7 million just this year alone. And wages are starting to grow as well. So if you look at all this together, you could easily conclude that consumer spending capacity is solid. The picture, of course, isn't completely rosy. Our GDP growth is lackluster. We'll probably come in at around a 1% growth, which isn't that great. The Feds were hoping for 2.8% this year. Also, S&P profits are lower than they've been in over 5 years. Conditions overseas look more menacing, and global investors are pulling money out of equities. And also troubling, since 2008, stock prices have risen faster than the economy has expanded, and the gap is the widest it's ever been. Now, this is probably a function of interest rates. Interest rates are so low that it makes other investments much more attractive at a lower threshold. Now, during election cycles, candidates and journalists point to exaggerated claims on both sides of the spectrum, and it's really tough to know what's going on. That's why it's important to focus on the facts and also to remain focused on the long term. Warren Buffett said it really well. He said recently that it's been a terrible mistake to bet against America over the last 240 years, and now it's no time to start. Now, I don't know what lies ahead in the short run. Nobody does. The good news is that you don't have to in order to make smart investment decisions. I'm going to continue to allow the market to guide our investment decisions, and I'm going to continue to keep you in the loop. If you have any questions, just reach out. I'll be happy to connect with you. And please do me a favor and share this video or this presentation with at least 2 friends that you care about. Thanks. I look forward to hearing from you soon.